It's almost hard to remember a time before you could just tap your phone or card to pay, isn't it?
Yeah, totally.
Cash used to be the default, but
Yep.
I mean, if you look at how things have shifted just since 2016, cashless payments have really taken over here in the U.S.
Mm-hmm.
And this brings us to something super interesting that's building on this trend. Embedded finance, and specifically embedded payments.
Right.
Think of this as your shortcut to getting a real handle on this rapidly changing world of how we pay and get paid.
Exactly. And to help us navigate this, we've got a really great mix of information for you today.
Well, good.
We've looked at some details from the Paysafe developer portal, focusing on how they handle like notification resends, which is, well, pretty crucial for reliable systems.
Definitely need that.
Yeah. We've also dug into a couple of Paysafe reports, one giving a broad view of embedded finance and another on the essentials of secure payment systems.
Okay.
Then we've got a forward-looking piece, a JP Morgan sector spotlight on embedded payments from this year, 2025.
Ah, very current.
hmm And to see how this plays out in the real world, we've also explored a Marqeta blog post packed with examples. And rounding it out is a press release about a new partnership between Paysafe and 8cap to create an embedded wallet solution.
Gotcha. So our goal in this deep dive is to really get under the hood of embedded finance and payments. We want to understand its journey so far, see it in action through concrete examples you're likely already encountering, probably without realizing it,
Very possibly.
and ultimately figure out what impact this all has, especially for, businesses like yours listening in. Okay, let's unpack this by looking at something that might just surprise you. How much do consumers actually know about embedded payments?
Yeah, this is fascinating right off the bat, this potential blind spot. While the industry is buzzing about embedded payments, Paysafe's Lost in Transaction survey from 2022 uncovered that nearly half, a significant 49% of consumers across EMEA, North America, and Latin America hadn't even heard the term embedded payments.
Wow, almost half.
Yeah. And even among the 51% who had heard of it, almost a quarter of them, specifically 23%, weren't really sure what it meant.
Huh.
It makes you wonder if the industry's internal conversations are, matching up with the public's understanding at all.
That's a huge disconnect, isn't it? You'd think with all the talk about frictionless experiences, more people would be familiar with the tech making it happen.
You would think so.
But there's a real split depending on where you are in the world, right? I saw that in the notes.
Definitely. Latin America showed a much higher level of familiarity. There, only 39% hadn't heard of embedded payments, which is quite a bit lower than the combined 53% in EMEA and North America.
Interesting. Why do you think that is?
Well, it's likely that the faster embrace of alternative payment methods we've seen in Latin America over the past few years has contributed to a greater general awareness of digital payment technologies. They're perhaps just more accustomed to these newer ways of paying.
Okay, that makes sense. So in many parts of the world, awareness is low. But what about those who have heard the term? Do they feel like they actually understand what it involves?
Not really, no. The survey revealed that even among those who are aware of embedded payments, a substantial 58% felt they didn't know enough about it.
Still over half.
Yeah, and what's interesting is that this lack of confidence was pretty consistent across all the regions. 54% in EMEA, 58% in North America, and 63% in Latin America. So it really points to a big opportunity for education and clearer communication.
It does, doesn't it? It seems like businesses that are offering these embedded payment options have a real chance to not only provide the convenience, but also to explain the benefits to their customers, which could really help drive adoption and, importantly, build trust.
Exactly. And the Paysafe report makes a really good point. Many people are probably already using embedded payments without even knowing the term.
Right, like you said earlier.
Yeah, think about how effortlessly you pay when you book a ride using an app or order takeout. The payment is just integrated. It's seamless. You don't necessarily stop to think about the underlying technology that makes it so smooth. It just works.
Which raises a really interesting question. If these transactions are happening so seamlessly, why the lack of awareness about the term itself? Could it be that the very success of embedded payments, the lack of friction, means people aren't focused on how the payment is happening, just that it has happening easily?
That's a very insightful point. I think that's probably it. Consumers definitely notice when a process is clunky or frustrating.
Oh, yeah.
The core idea behind embedded payments is to make that part so effortless that it becomes almost invisible. You're not fumbling for your wallet or re-entering card details every single time.
Right.
It's just integrated into the experience. So the lack of explicit awareness of the term might just be a positive side effect of a well-designed, frictionless experience.
That makes a lot of sense. But the survey also touched on some potential concerns in people's minds, particularly around security. What did they discover there?
Yeah, security is definitely a major factor. Globally, among those who had heard of embedded payments, only 38% believed they were more secure than traditional payment methods.
Only 38%. That seems low.
It does. And again, we see those regional differences. Latin America was more optimistic, with 47% having that belief, compared to a lower 31% in EMEA and 37% in North America.
Mm.
This highlights that while the technology might be secure, the perception of security still needs work in many regions.
And beyond just general security, there was a specific worry about the accuracy of charges, right? Being
Yeah.
charged the wrong amount.
Yes, that was a significant concern. A substantial 59% of those who are aware of embedded payments expressed worry about being charged the wrong amount.
Nearly 60%.
Wow. Yeah, this is a really fundamental aspect that businesses and providers need to tackle directly. Building confidence by clearly communicating the security measures that are in place and emphasizing the control consumers have over these payments is going to be essential for wider acceptance.
So it's a bit of a paradox. People are likely enjoying the convenience without necessarily knowing what it's called, but there's a real need to educate them about the technology and, crucially, address those underlying security concerns.
Mhm.
Okay, so now that we've got a picture of what consumers think, let's dig into how this whole embedded finance trend actually came about. How did we get here?
Well, the Paysafe report outlines a really clear three-stage evolution. It began with payment gateways, which were, all about just enabling online payments for e-commerce, basic stuff.
Okay, step one.
Then came the era of open banking, which really broadened the options for payments, introducing things like digital wallets and direct bank account transfers, more choice. And the third stage, where we are now, is the growth of what's called the platform economy, essentially, an economic and social system built on digital platforms and online marketplaces.
Like ride-sharing apps, food delivery.
Exactly. And this is really where embedded finance is taking off.
So it's a journey from simply enabling the transaction to providing more choices in how to pay, and finally, to weaving financial services directly into the applications and experiences we use every day.
You got it.
What are the big forces driving this platform economy and, consequently, embedded finance?
It's really a mix of what customers want and what businesses are looking for. Customers are increasingly demanding experiences that are fast, seamless, and highly convenient.
Less hassle.
Yeah, they want to be able to pay in the way that suits them best within a digital environment they trust. For businesses, the advantages are compelling. Potentially lower costs for processing transactions, the opportunity to generate new revenue by offering financial products.
New income streams.
More control over the services they can provide, and perhaps most importantly, deeper insights into their customers' spending habits. Data.
It sounds like a mutually beneficial situation when it works well. And the predictions for how much embedded finance will grow are pretty impressive, aren't they? I saw that number.
Absolutely. The report forecasts that the embedded finance market will generate around $230 billion in revenue by 2025.
$230 billion.
Yep, and they estimate that embedded payments will make up about 60% of that. That's a huge market opportunity.
Wow.
And it's being fueled by the rapid shifts we're seeing in how people prefer to pay, with the growing popularity of things like cryptocurrencies and digital wallets. This need for flexibility and agility in payment functionality is becoming increasingly important for businesses to stay competitive.
Okay, so the potential is enormous. But how do businesses actually make embedded finance work effectively? It can't be as simple as just, plugging in some new technology, can it?
No, you're spot on. The Paysafe report emphasizes that a well-defined strategy, one that's truly centered on customer needs, is absolutely crucial. It's not about just adopting the latest tech for the sake of it.
Right.
They suggest three key questions that businesses need to really grapple with. The first one is, where's the friction?
Where's the friction? That's a really smart way to think about it. What kind of friction are they referring to? Is it just about slow payments?
It could be friction in the customer's journey, maybe a cumbersome checkout process with too many steps or limited payment options.
Okay.
Or it could be operational friction, perhaps regulatory challenges in specific industries like online gaming that make offering certain financial services difficult. The core idea is to pinpoint those pain points and then explore whether embedding financial services can be the solution.
Right, solve a real problem. And the second key question they pose is, what's your hook? That sounds intriguing.
Yeah, this is all about how you can leverage the transaction-related data you already possess to your advantage.
The data again.
Exactly. By embedding financial services, you can not only offer more relevant products to customers right when they need them, but also potentially unlock entirely new streams of revenue. The report highlights Tesla's move into offering insurance as a prime example
Oh, yeah, I remember reading about that.
of a company outside of traditional finance successfully using its data and existing customer base to provide financial products. Because they know so much about driving habits from the cars, they're in a unique position to offer tailored insurance.
That makes perfect sense. They have a wealth of data about how people drive, which is directly relevant to assessing insurance risk. So it's about creatively thinking about how financial services can complement and enhance your core business offering.
Precisely.
What's the third critical question businesses should be considering?
The final question is, who's your partner? This is absolutely vital. Implementing embedded finance is not something most businesses can or, frankly, should attempt to do completely on their own.
Right, it's complex.
Very. Selecting the right partner who brings the necessary expertise, whether it's technical, regulatory, or even regional, is crucial for success. They also need to have the capacity to scale their infrastructure, to handle fluctuations in demand, and adapt to evolving market needs. You need someone reliable.
So it's about finding a partner who not only has the technical know-how, but also deeply understands the complexities of the financial services landscape and can grow alongside your business. Makes perfect sense. Now let's dive into some actual real-world examples. I always find it really helpful to see how these abstract concepts are being applied in different industries.
Totally agree. The Marqeta blog post provides some excellent illustrations across various sectors. In the world of e-commerce, we're seeing things like personalized insurance offers appearing during the checkout process.
Like add shipping insurance.
Yeah, or product protection. The increasing prevalence of branded credit cards offered by online retailers, and the sheer convenience of one-click payment options.
Those are all things I've definitely experienced as someone who shops online. It makes the whole process so much smoother when those options are integrated right there.
Mm-hmm.
What about in other areas of our lives?
Peer-to-peer payments are another fantastic example. Think about how seamlessly you can split the fare within a ride-sharing app or instantly reimburse a friend through a messaging platform.
Oh yeah, splitting costs.
WeChat in China, as the article points out, has really mastered this with its embedded digital wallet that facilitates easy peer-to-peer transfers. It just simplifies those everyday financial interactions.
Oh yeah, I've seen how deeply integrated those features are in some apps like that.
Yeah,
Definitely beats having to open a separate payment app and go through multiple steps.
absolutely.
What about when you're physically in a store? Anything happening there?
That's where point-of-sale financing comes into play, often known as Buy Now, Pay Later, or BNPL.
Ah, BNPL. It's
Ah,
everywhere now.
it really is. Companies like Klarna, which partners with Marqeta, enable customers to break down their purchases into installments right at the checkout, often through the use of virtual cards.
Virtual cards, right?
This makes larger purchases more manageable without the traditional hassle of applying for a new credit card. The article notes that Klarna's transaction volume significantly increased after partnering with Marqeta, really highlighting the impact of this embedded payment technology.
BNPL has become incredibly common, hasn't it? It's fascinating to see how virtual cards are enabling that seamless experience. What other applications are worth mentioning?
Well, digital wallets and various banking functionalities are becoming increasingly embedded in our digital experiences. You can now store funds, make direct bank payments, and manage your finances within a wide range of apps and websites without needing to switch between different financial tools.
Like banking inside another app.
Sort of, yeah. Apple Pay, which is embedded across Apple's ecosystem, is a prime example. Some apps even allow you to generate temporary virtual card numbers for safer online shopping, all within their integrated digital wallet features.
So it's about bringing those fundamental financial tasks directly into the platforms we're already using on a daily basis. That's the ultimate inconvenience, isn't it?
Pretty much.
What about some industries where it might be less obvious? Insurance, gaming.
Insurance is an interesting one. Imagine receiving instant payouts via a virtual card if your luggage is lost during a flight, with the whole process managed directly within the airline's app.
Ooh, that'd be nice.
Right. Or streamlined insurance claims being handled within travel apps. Even the online gaming industry, known as iGaming, is seeing significant benefits by embedding financial products, simplifying the often complex onboarding process with single Know Your Customer KYC procedures.
KYC, the identity checks.
Exactly. Processes to verify a user's identity and by linking digital wallets directly. It makes getting started much smoother.
That makes a lot of sense for iGaming, where a smooth and quick start is crucial for player engagement. The Paysafe report also touched on the growing interest in cryptocurrency payments. Where does that fit into the picture of embedded finance?
Yeah, cryptocurrency is definitely gaining traction, with a noticeable percentage of businesses already accepting or planning to introduce crypto as a payment option. However, it's definitely more intricate than traditional methods due to regulations around anti-money laundering, AML, and Know Your Customer KYC requirements.
More hoops to jump through.
For sure. The Paysafe report emphasizes that businesses looking to integrate crypto payments often need to partner with specialized providers and establish relationships with crypto-friendly banking institutions.
So you need experts.
You do.
Okay.
Interestingly, they point out that acceptance rates for crypto purchases tend to be higher when made through digital wallets, as some traditional banks are still hesitant to directly process crypto transactions.
Okay, so wallets help bridge that gap. So while there's increasing interest, navigating the regulatory and practical complexities of crypto payments often requires leveraging embedded finance solutions through specialized platforms and partners.
That's a good summary.
And the Paysafe report also highlights the concept of right-sizing security. What does that actually mean in practice? Sounds a bit jargony.
Yeah, maybe a bit. But it's about striking the right balance between the strength of security measures and the ease of use, depending on the specific context of the transaction.
Okay, so not one-size-fits-all security.
Exactly. For higher risk activities like cryptocurrency trading, users might expect and even appreciate more robust security protocols. More friction is acceptable there.
Right?
But for a routine transaction like paying for your morning coffee or booking a ride, too much friction can lead to frustration and potentially cart abandonment. People just won't bother.
Makes sense.
So it's about tailoring the level of security to the specific transaction and the user's expectations to create a seamless yet secure experience.
That's a really insightful and important point. You definitely don't want to compromise security, but you also don't want to make the payment process so cumbersome that people give up. Okay, let's switch gears a bit and look at the broader impact of embedding payments, drawing insights from that JP Morgan sector spotlight. They highlighted the growth trend in cashless payments in the U.S.
Yes, their report clearly illustrates the steady rise of cashless payments in the U.S. from 2016 to 2021. Just keeps going up.
Yeah.
This upward trend, as they emphasize, is creating significant opportunities for software-focused startups to innovate by building in payment models that are not only seamless, but also enhance the overall user experience and offer additional value-added services.
And despite some recent shifts in the economic landscape, the fintech sector as a whole seems to be holding its own, particularly when it comes to mergers and acquisitions, right? M&A.
That's right. While the amount of venture capital being invested in fintech has seen a recent moderation, maybe cooled off a bit,
Yeah, heard about that.
the report points out that exits, especially through acquisitions, have remained relatively strong. This suggests that companies outside of the traditional financial sector are increasingly looking to acquire fintech expertise and integrate those capabilities directly into their own offerings, buying the tech instead of building it.
That makes a lot of sense. It can often be a faster and more efficient route to gain specialized knowledge and technology than trying to develop it internally from the ground up.
Definitely.
The JP Morgan report also noted that startups focused on bill payment and settlement have consistently attracted the most venture funding within the payment space.
Hmm.
What do you think that is? Seems specific.
Well, their consistent appeal to investors likely reflects the fundamental role they play in streamlining financial operations and improving efficiency across a wide range of industries. Everyone has bills to pay, right?
Yeah.
As more and more businesses prioritize optimizing their payment processes, these types of startups, which offer innovative solutions in areas like bill pay and settlements, are just really well positioned to capitalize on that growing demand. It's a core business need.
Okay. Beyond just the direct revenue generated from processing payments, embedding payments can unlock some really interesting strategic advantages for businesses, can it? Like beyond just the transaction fee.
Absolutely. The report highlights the significant potential for reducing user churn, keeping customers around longer.
How does that work?
By capturing the revenue from payment processing, companies might be able to lower the price of their core software or service, making it more attractive to customers.
Subsidize the main product.
Exactly. This, combined with the enhanced user experience that comes from seamless transactions, can lead to greater customer satisfaction and ultimately better customer retention, meaning a lower rate of churn. Happy customers stick around.
And, as we all know, lower churn has a really significant positive impact on the lifetime value of a customer, the LTV, and the overall financial health of a business.
Exactly. The JP Morgan report even includes a hypothetical scenario that illustrates how embedding payments, by contributing to decreased churn and an increased customer lifetime value relative to the cost of acquiring that customer, the LTV to CAC ratio,
Another magic ratio.
can substantially improve a company's financial performance over a period of several years. It really underscores the strategic importance of getting this right. It's not just a feature, it's core strategy.
It's not just about the individual transaction. It's about the entire relationship with the customer. Now let's briefly touch on that specific partnership we mentioned at the very beginning, the collaboration between Paysafe and 8cap. What's the key focus there?
Yeah, so this partnership is centered around offering a combined embedded trading wallet solution. Essentially, it's bringing together Paysafe's extensive expertise in regulatory compliance and payment processing with 8cap's specific capabilities in the realm of retail derivatives trading.
So payments plus trading tech.
Right. By operating within their jointly held global licensing framework, they aim to provide businesses with a seamless and secure solution for embedding trading functionalities into their platforms.
So it's about integrating the necessary regulatory and payment infrastructure with the actual trading technology. What specific strengths does 8cap bring to this partnership?
8cap is particularly known for its B2B embedded trading API.
API, the interface.
Right, which allows partner businesses to offer their own customers access to a wide range of over 1,000 tradable instruments. This includes stocks, indices, cryptocurrencies, foreign exchange, FX, and commodities, all within a regulated environment. They have a strong reputation, particularly for their expertise in regulated cryptocurrency derivatives.
Okay. It sounds like a really powerful combination, offering a comprehensive embedded solution for businesses that are looking to integrate trading capabilities into their existing platforms and services.
Sounds like it.
Okay, we've covered a lot of ground in this deep dive. Let's try to bring it all together. What would you say are the most important key takeaways for our listeners, if they remember one or two things?
Yeah, okay. I think the central takeaway is that embedded finance is fundamentally about making financial tools and services an invisible, integrated part of non-financial platforms and experiences.
Invisible and integrated.
Exactly. It's being driven by the demand for greater convenience and efficiency from both consumers and businesses. And while many consumers might not be familiar with the specific term embedded payments, they're increasingly encountering and benefiting from these integrated experiences every day.
Right.
For businesses, the potential advantages are substantial, ranging from enhancing the customer experience and generating new revenue streams to fostering stronger customer loyalty. It hits multiple points.
So it's much more than just a trendy buzzword. It represents a real and significant shift in how financial services are being delivered and consumed in the digital age.
Definitely.
It sounds like the crucial thing for businesses is to truly understand their customers' needs, identify areas where friction exists in their current processes, find that friction point, and then strategically partner with the right providers to build valuable and seamless embedded financial experiences. Choose your partner wisely.
Precisely. And with the ongoing growth of cashless payments and the increasing consumer expectation for digital financial services, embedded finance is very likely to become even more widespread and influential in the years ahead. It's not going away.
No, seems like it's just getting started in many ways. This has been a really insightful deep dive. It truly highlights just how much the financial landscape is constantly evolving, often in ways that we as consumers don't even consciously notice.
Yeah, it's happening behind the scenes.
So, for you who are listening, here's a final thought to consider. Take a moment to think about the various platforms and services you interact with on a daily basis. Where do you see opportunities for embedded financial services to create a more seamless and valuable experience for you?
Good question.
And what potential opportunities might this present for your own business endeavors or areas of interest? It's definitely a fascinating area to keep an eye on. Thanks for joining us for this deep dive.
Thanks for having me.
We encourage you to explore these concepts further and consider how embedded finance might be relevant to your specific interests or industry.